Hello everyone, welcome back to the Gold Technical Analysis session with Mukmik. So, yesterday we hit our take profits. So, well done everyone, congratulations to your profits. So, let's have a little recap on what happened and why did we send out those signals. Alright, so here we go. So this is about where we were yesterday. Okay, so the signal was that buy goals at 1790, take profit at 1798. Okay, and stop loss is 800 points as well, so that's gonna be the 1782. Okay, so that was our plan. Why is that? If you remember on my last video, I said that 1790 would be our support for today. That's what I said on the yesterday's video, so that's why we are going for a buy at 1790. All right, and what happened was that beautiful. Did you see that? Really quick. Okay, so that's happened once the news released about the CPI yesterday, and it hit our take profit, and we did have our slip page as well, so we have a little extra profit in our pocket. So well done everyone. Let's see what I've got for you today. Okay, so if we go back to the weekly time frame, if you remember, we were waiting for selling at this supply zone, and it seems like the price have reached this supply zone already. If you can see, the wick of this candlestick is really close to the supply zone, and I would say that that has been used. Okay, so this supply zone has been used from yesterday. All right, and the trend in the weekly time frame is still being a downtrend, so that's why we need to be really careful on buying today, because the price have been sent down by this supply zone and the downtrend that we need to be careful about if we are going for buying. All right, so that's the big picture. The price could make even a lower low, because if it's gonna go continue as a downtrend, that's gonna happen, but that's not gonna be very soon, because this is a very large time frame. We are in the weekly time frame at the moment. Okay, so let's go to the daily time frame. So in the daily time frame, if you notice, the candlestick that we had from yesterday is a bearish reversal bar. So today candlestick could be a bearish one, okay, because it has this formation before, and we are still having this uptrend in the daily time frame. All right, so the important, like the most important swing that we need to be careful if we go for selling is this one. Is because this swing is the swing low that sent the price up to make the highest high and to test this supply zone. Alright, so in the daily time frame, although it have touched this supply zone, if the price could not make a lower low than this swing, it could go up at any time. Alright, so that's the big picture for the daily time frame. Alright, so let's drop down to 4 hours time frame. Okay, so in the 4 hours time frame, I would say that our buying plan here is still being on my mind, but we need to reduce risk. Why is that? Because the price have really nearly touched this supply zone, and it also have this classic divergence pattern, if you remember. So the classic divergence, the price makes a higher high, but the RSI is making a lower high, and that means that the price could drop down really strongly. Okay, so if we are going for buying at this demand zone, please reduce your risks. But you can do that, you can go for a buy. Why is that? Because we have our gold behavior here as well. Okay, so if you notice, we do have our demand zone here, and this candlestick shows us that we have quite a strong buy power as the wick of the candlestick is quite long. Alright, so the first touch at this point, I would say that it's possible to make a profit, but that's not gonna be like to be a long run. Okay, that's gonna be a short-term profit. So that's around the same price at 1770 to around 1764, somewhere around that. But please reduce risks. If you remember yesterday, oops, sorry, that's my language. Reduce risks. Okay, if you remember yesterday, I also have this zone as well, but I did not tell you to reduce the risk because yesterday the price did not touch our supply zone. But today it has reached the supply zone, and the supply zone have set the price down. That's the reason why we need to reduce the risk here. Okay, for the selling plan, I would say it's quite beautiful. So we have our QM pattern here in the 4 hours time frame, if you remember the pattern. So the price could make a lower low than this, and it also break the trend line, the uptrend line. So we will have our QM sell from there. We will use our Fibonacci retracement, and I'll use this entry point. Okay, but I would say that the price might drop a little further down, so you need to update the swing yourself. All right, but I would say that it's not gonna go far from 1800. All right, so that's the QM sell pattern in the 4 hours time frame. Okay, this one you need to reduce risk as well. Why is that? Is because the price might make this double bottom pattern, and if we have that, the price could make a higher high as well. Okay, so these are just the rough plan for today. It's the big picture. They are not confirmed. Alright, if you need the confirming signals, you need to follow us on our Telegram. I'll leave the registration link down below. So that's the rough plan for today. I hope you learned something from this video, and I hope you get some new ideas from this video as well. If you do, please give it a thumbs up and share it with your friends, and please go follow us on our Telegram. I'll see you in there. Bye.